Well, welcome everyone. We're glad that you're here. We're going to go ahead and get started. I'm Cindy Nellis, and I'm the director of the Penn West Clarion Small Business Development Center. We're so happy that you're here. The Pennsylvania Small Business Development Center network is partnering with the Department of Revenue to present a four-part series offered monthly. Today's topic is Pennsylvania taxes for new businesses. Our other three topics are getting started with MyPath, sales tax basics, and withholding basics. So we hope that you plan to join us for these topics in the months ahead. And here's our flyer. I'll be sending you this flyer, and I realize that we just have two more for this calendar year, but we are in the process of planning 2025, and we anticipate having a similar lineup. So just be on the lookout for our new flyer come 2025. Today's webinar is being recorded. Many people ask that, and we will also be sharing the slides that you see and along with the flyer and then anything else that comes up today. As a reminder, your participants' videos have been disabled and your microphones have been muted. So if you have a question for our presenter, we ask that you use the Q&A. Our presenter, Stephanie, has a few colleagues with her today, great experts that will be monitoring the Q&A. Now, if you have a question for me, your host, I just ask that you throw that into the chat and I will be monitoring that as well. So let's get started. I want to introduce you to the Small Business Development Center. We are a grant-funded program, and our mission is to help businesses start, grow, and succeed. We are here to provide you with education and information, as well as provide you tools and resources to help you, our business owners, make better business decisions. We provide our services in a confidential manner. So we pledge to you our confidentiality in providing our one-on-one business consulting services. And of course, today is one of our training events. We have lots of different training events. So if this is the first that you've connected with us, we hope that you come back and start to take a look at some of the training that we will be emailing and marketing out to you. So the Small Business Development Center, we're here to help small businesses, but to us, a small business is any business with less than 500 employees. So if you look around your community, that's practically everybody. Always for profit though, so that is one thing. You can see here that our consulting services are provided at no cost. I've mentioned that we also are confidential. As well as our seminars and our webinars, we offer some are at no cost, like today. Some are low cost. So there are some that do have a small fee. Today is a live webinar. Some are in person. And then we also have a portfolio of training events throughout our network that is on-demand training. So again, I'll be sending you a link. PASBDC.org is where you would go to peruse the various topics that we have on hand. And again, our tools and resources are related to databases, templates, other types of forms and guides. So we're here to really provide you with, just a huge variety of information and tools and resources. The Small Business Development Center network here in Pennsylvania is made up of 15 centers. And we're able to provide our services at no cost because we are grant funded, and our core funding comes from the Small Business Administration, which is a federal grant, and the Department of Community and Economic Development through a program called PREP, Partnership for Regional Economic Performance. And as well, our host institutions do invest in our program, and we thank them for that. I'm from Penn West University Clarion, and you can see, depending on where you're located, you can reach out to that center that covers that county. Now, there's no wrong door. I'm going to provide you with my contact information. And so if you would like to connect with an SBDC for one-on-one business consulting services, or simply just have a question, you can certainly reach out to me. And that information, is provided here. So today I would like to turn it over to our speaker. Stephanie Schreck is a research analyst with the Customer Outreach Relations and Engagement Division. She has over 20 years of experience, and she started her career in the core division as a phone representative back in 2019. And through her years, Stephanie has served in many different roles within the Bureau, all of which have allowed her to work directly with the customers of the Department of Revenue. So Stephanie and colleagues, we're glad that you are with us. Stephanie, I'm going to stop sharing and, oops. Let's see, there we go. So that you can share yours.
Okay. Thank you so much. Good afternoon, everyone, and thank you for joining us. Again, my name is Stephanie Schreck, and I am a research analyst with our Customer Outreach Relations and Engagement Division here within the Customer Experience Center for the Department of Revenue. I am honored to have the opportunity to talk to you today about Pennsylvania taxes for new businesses. We have found in our experience that most taxpayers work very hard to comply with PA tax rules and regulations that pertain to their businesses. But we also know that tax law is not always the easiest thing to understand. So our goal today is to walk you through some high-level information that you should know as a new business owner. We also are going to point out some common errors to avoid, which can ultimately save your business both time and money. So let's get started here. Give me 1 second. All right. Okay. All right. So this slide here is our agenda for today. You can see here that we are going to talk about a few different tax types, including income tax, trust fund taxes, and business use tax. In addition, we will talk about exemption certificates, great tips for success, and your rights as a taxpayer. So let's get started with income tax. Businesses have an annual income tax filing requirement, just like any taxpayer. The type of business structure that you have determines what form you will use when filing. Sole proprietors report income and expenses using the PA Schedule C. This is the profit or loss for business or profession for each business. These are people that do not have an EIN for their business. Instead, the business is associated to their social security number. We also have an owner of a single member LLC that receives net profit income reports. Its income and expenses also use the PA Schedule C. The owner of a single member LLC that owns and operates a rental property reports its income and expenses using a PA Schedule E. This is for rent and royalty income and loss. And then we have partnerships, both general and limited, are required to file a PA 20S, PA 65 information returns and provide each Pennsylvania resident partner with a PA Schedule RK1 and each non-resident partner with a PA Schedule NRK1. If the partnership is taxed as a partnership for the federal income tax purposes, this business will have an EIN. Okay, so in addition to income tax, you may also have what are called trust fund taxes. Trust fund taxes are collected by the business owner and then held in trust until they are paid to the Commonwealth. There are 5 taxes that represent trust fund money, but today we are only going to focus on 2 that will most likely pertain to your business. These are withholding tax and sales tax. It is important to remember these taxes must be reported timely and reported and remitted in full to the Commonwealth. Again, you are simply holding these taxes in trust until you file and pay. Please keep in mind that these funds should not be used to cover business or personal expenses. We suggest that you keep these funds in a separate account until you are ready to remit them to the department. So here we show all 5 taxes that represent trust fund money. Some or all of these may pertain to your business. So we do have withholding tax usually occurs when an employer withholds state income tax from an employee's pay and then remits the money to the state. Sales tax is levied on the sale of taxable tangible personal property and certain services. The next 3 taxes are mainly associated with like vehicle leases and rentals, as well as the new tire fee, and they collectively they fall under what's termed as PTA taxes and fees. PTA stands for Public Transportation Assistance. The vehicle rental tax pertains to car rentals from businesses with an inventory of 5 or more vehicles for rent. And the tax on liquid fuels is just what it sounds like. This tax is endured by the consumer, although the distributor is liable for its collection and payment. Please note that trust fund taxes must be accounted for on the accrual basis of accounting. Accrual accounting looks to match revenues with expenses based on the business cycle of the firm, rather than with the actual inflows and outflows of cash. Therefore, sales tax liabilities are recognized at the point of sale, not when the cash is actually received. So let's dive in a little deeper. So the first question here is, what is withholding tax? As previously mentioned, withholding tax is usually when an employer withholds PA personal income tax from an employee's pay and remits the money to the state. In MyPath, which is our customer portal, you will see withholding tax broken down by 3 different withholding types. The first withholding type is employer withholding, which applies to regular W-2 employees. Next is the other income withholding. This is for non-wage withholding reported on a 1099 miscellaneous or a 1099 NEC. Typically for small businesses, this applies to independent contractors. If you need some assistance with determining whether an individual is a W-2 employee or an independent contractor, you'll need to determine things like, is the worker being hired for a temporary project? Can they choose where and when the work is performed? Do they use their own materials for the work performed? Are they paid a flat fee or an hourly rate that is invoiced? So as a rule of thumb, if you answer no to all of these questions, chances are they are a W-2 employee. If you are still uncertain whether someone is a W-2 employee or an independent contractor, you can complete the federal form SS8 and the IRS will make the decision for you. So looping back to the different types of withholding, we mentioned that there are 3. So the final withholding type would be retirement withholding. This is reported on a 1099-R and applies when withholding is taken on retirement income. In the state of Pennsylvania, withholding is taken at the time the retirement contribution, not the distribution. Provided certain qualifiers are met at the time of the withdrawal by the employee. This is mostly likely not going to pertain to business owners, as most of the time retirement plans are usually administered by a third party. So the next question is when do I withhold? If your business is a sole prop or partnership, association, corporation, a government body, or another entity that employs 1 or more persons, it is required under the Internal Revenue Code to withhold federal income tax from wages paid to an employee. You are then required to withhold or remit Pennsylvania personal income tax from the compensation you pay to your employees. Therefore, the simple answer is every time you issue a paycheck. Pennsylvania law requires employers to withhold Pennsylvania personal income tax from employees' compensation in 2 common cases. The first is when a resident employee performs services within or outside of Pennsylvania, and also when a non-resident employee performs services within Pennsylvania. Currently, the Pennsylvania personal income tax rate is 3.07%. So this means that you must withhold 3.07% for any employee who lives in Pennsylvania, regardless of where the work is being performed. You must withhold 3.07% for any employee who lives outside of Pennsylvania if the work is performed within our state. So when is it due? The current schedule for employers to withhold and remit employees' taxes on wage and salary income can vary. The frequency of remittance is based on the amount of withholding that is required. So the greater the amount of withholding, the more frequent you are required to remit. The return should be filed every quarter for this tax, and there is also a W-2 reconciliation that must be filed at the end of the year as well. So I'm pretty sure everybody wants to know, how do we file and pay? The department has the customer portal, which is called MyPath, for customers to electronically file. Again, MyPath is an internet-based filing system that allows taxpayers to file returns and makes payments electronically without cost. So it is a free service. Simply visit mypath.pa.gov and sign up for your user profile. The MyPath customer portal does have both logged in and non-logged in functionality, but most business tax transactions must be completed as a logged in user. So therefore, you will need to create a profile to get started. We have published several Revenue 411 videos, which does provide step-by-step instructions for using MyPath. So if you are new to the system, we do highly recommend that you seek out those resources to help with getting started. It is also important to note that under regulation, any payment of $1,000 or more must be remitted electronically. So we strongly encourage you to use MyPath rather than sending in a check to avoid any additional penalties. If you have any questions related to withholding tax and those requirements, we do encourage you to check out our REV 415 Employer Withholding Information Guide for additional information. So next up is we have sales tax. So what is it? Pennsylvania sales tax is levied on the retail sale, consumption, rental, or use of tangible personal property. This can include digital products and certain services within Pennsylvania. Currently, Pennsylvania's sales tax rate is 6%. However, by law, a 1% local tax is added to purchases made in Allegheny County, and 2% local taxes added to purchases made in Philadelphia. There are some major items exempt from sales tax. Some of these include food that is not ready to eat, candy and gum, most clothing, textbooks, some computer services, pharmaceutical drugs, sale for resale, and of course, residential heating fuels such as oil, electricity, gas, coal, and firewood. Generally, services to the human body, such as haircuts and massages, are also exempt from sales tax. And then we do have an additionally permanent landscaping services, except for grass cutting, are generally exempt as well. So when do I collect it? Sales tax must be collected at the time of the sale, unless the sale is on credit. Taxes due on credit sales must be remitted within 30 days of the date of the sale. A seller is liable for reporting and remitting taxes and fees, with the tax return covering the period in which either a taxable sale was made or the tax or fee should have been collected. So for those of you familiar with accounting terms, I said this earlier, but this is accrual-based accounting, basis accounting. This is the most commonly used accounting method where a business reports income when earned and expenses when incurred, as opposed to cash basis accounting, which reports income when received and expenses when paid. So for example, in August, you sell a widget to Sam for $1,000. Since the widget is a taxable item, you charge Sam 6%, which comes to $60. However, Sam only pays you $640 in August and promises to pay the remaining $420 in September. Under Pennsylvania law, you are required to remit the full $60 of sales tax due on the sale of the widget in August. Please be aware that a seller may be assessed for failure to collect taxes and fees, plus charges for appropriate interest and penalties. I am sure many of you have questions about what sales or services are taxable. And that is not something that we are going to cover in detail during this module. We do have a sales tax basic presentation that should be running in the future. You can also check out our retailer's information guide, the REV 717, for a little bit more detail regarding taxability. So when is sales tax due? So unlike withholding, sales tax filing frequencies may vary. When you are new sales tax filer, you are set up as a quarterly filer, meaning that your returns are due April, July, October, and January. But your filing frequency can change. So every year, the department reviews every business that files returns to determine whether or not the filing frequency should be changed. If such a change is made by the department, the business is notified in writing. It is very important to pay attention to these notices because you do not want to be in a position where you are a quarterly filer that has now been changed to a monthly filer and you threw your notice out, so now you are unaware. So how do we file? So like withholding tax, we encourage you to use MyPath for filing and paying. Again, you do have to have a user profile, so it is important to sign up before getting started. Make sure your business is registered using the online business tax registration hyperlink on the MyPath homepage before creating a user profile for MyPath. The department also has some third-party vendors who will provide e-filing software for those taxpayers who do not wish to use the department's e-filing option. We do have a full list of approved software vendors available out on the department's website. And also, just like withholding tax under regulation, any payment of $1,000 or more must be remitted electronically. So we're going to move on to use tax. So use tax by no means is unique to Pennsylvania. Every state has a sales tax that has a sales tax, also has use tax. The purpose of use tax is so that Pennsylvania businesses are not put at a disadvantage to businesses who do not charge sales tax. Sales tax is imposed on taxable goods and services at the time of the sale and collected by the seller. In instances where the seller does not charge sales tax on a taxable item, the purchaser is now responsible for remitting the tax on their first use. This is use tax. Use tax exposure occurs most often when a business buys taxable goods over the internet or through the mail, and the seller does not charge sales tax. Again, in these cases, the purchaser must pay their use tax obligation in the month following the month of receipt in Pennsylvania. This is also true to purchases a business makes while out of state, where no sales tax is charged. The items become taxable upon delivery into Pennsylvania. The department's audit experience shows that most businesses owe use tax. but many do not pay use tax. It is estimated that upon audit, 80% to 90% of businesses are found to owe use tax. Please be aware that use tax also applies to individual consumers as well. So it's not just a business tax. The department does have a use tax voluntary compliance program, which allows you to go through your records and voluntarily come forward and pay any use tax liabilities. Maybe you have never heard of use tax before, or maybe you just didn't realize no sales tax was charged. So, but rather than wait until we would audit you and charge additional fees, you can self-report any delinquencies, and the Pennsylvania Department of Revenue will waive these penalties. These penalties can range anywhere between 5 to 25%. Okay, so how will we file and pay? Any business that incurs use tax liabilities on a regular basis is encouraged to register for a sales use tax account. Again, this can be done via MyPath. If you are already registered for sales tax, then you can file any use tax due along with your sales tax return. If the sales tax return is filed timely, then the use tax is considered timely no matter what filing frequency your business is on. If you are not required to be registered for sales tax and you have a use tax liability that needs to be paid, you may still file the use tax return and pay electronically via MyPath, but you will submit the filing right from the homepage. This means you do not have to log into your user profile. You will simply visit mypath.pa.gov, scroll past the login box down to the hyperlink that says file a use tax return under the returns panel. So while the sound of filing and remitting use tax might seem unsettling, please remember that our education and enforcement of this tax may help level the playing field for your business. Without our efforts, Pennsylvania businesses operating at a 6% disadvantage to online and out-of-state businesses. So for example, taxpayer A opens a kitchen supply business. As part of their business, they need furnishings for the business office. They pursue different quotes to get the best deal. In the first instance, they get a quote from an out-of-state seller who can ship the goods into Pennsylvania via third-party freight. The out-of-state seller is not required to charge sales tax. In the second instance, the taxpayer gets a quote from a Pennsylvania business that by law must include the sales tax. On first glance, it might look like a better deal is with the out-of-state seller. Many taxpayers would think that, but make the purchase resulting in a lost sale from a Pennsylvania business and a lost tax revenue to Pennsylvania. However, applying use tax, the out-of-state seller purchase actually becomes $10,706. So when the tax is calculated, is actually the Pennsylvania business who has the better deal. So that is the purpose of use tax, to keep Pennsylvania sellers from being undercut by out-of-state sellers. Sales and use tax would not apply on products purchased if you are selling to a customer intact. So now I would like to take a moment to talk to you about Pennsylvania exemption certificates. These are also known as the REV 1220. This exemption certificate is used by a purchaser and seller to document the reason for a sale of taxable property or services when tax was not collected. If properly completed and accepted in good faith, the REV 1220 will relieve the seller from the collection of tax. The exemption certificates are required to substantiate all exempt sales with the exception of the following: sales to governmental entities, sales of non-taxable tangible personal property or services, and then sales where delivery is required to be made outside of the Commonwealth. There are a couple of important reminders for this PA exemption certificate. The first is that there is not a generic business exemption. Many people think that just because they are a business, they are tax exempt. When completing the form, the reason for why the property or service is exempt must be filled out, and it must be signed and dated by the purchaser or lessee in order to be valid. Sellers should also be aware that a hard copy exemption certificate must be kept on file by the seller and should be shown both front and back pages. Documentary evidence must also be retained by the seller on these transactions. We do suggest that you staple a copy of the sales receipt to the exemption form. Note that upon audit, you will be assessed for sales tax not collected based on an invalid exemption form. So now I'm going to talk to you about some tips for success, resources that the department has to offer, and the rights of both taxpayers and the Department of Revenue. So our first tip for success is to maintain adequate records. A question that all new businesses have is, how long do I need to keep my business and tax records? There is no clear answer to that question since each business is different. But I will provide you some general advice. Most of the time, the answer is going to be 4 years, which means the current year plus the previous 3. For payroll, you will want to keep completed payroll records showing the proper withholding and remittance of Pennsylvania personal income tax and wages expenses for at least 4 years. For mortgage, capital asset, or investment records, you will need to maintain those documents throughout the life of the obligation, as they will be used for depreciation and cost recovery calculations. For purchases made during a tax year, you will want to keep records that will help to document current assets, inventory, and claim expenses against income. Again, these need to be kept for 4 years. You also need to keep record of any sales tax paid by you at the time of a purchase or use tax paid by you as needed. If you operate in multiple states, you will need to keep detailed records of Pennsylvania sales, as well as detailed records for every other state where you do business. And again, you will want to keep a file of all exemption certificates. Write the transaction number at the top to make it easy to find in case of an audit. And additionally, as we have previously mentioned, it is always a great idea to staple the sales tax receipt. So if you would do this, you should have accurately have the transaction number and all the information you would need right there. So while we cannot recommend any specific product to use for record management, we will let you know that there are various software products available that will help you keep your books and records in proper order. If you have a smartphone, we also recommend that you download like a free scanner app that will allow you to use the camera to save PDF copies of receipts when you are traveling. The next tip for success is to keep your address up to date. We are going to talk about address updates, and you know there are some who are going to think, gosh, who cares about that? This may seem very minor, but it is often overlooked and important. It's important to help us communicate effectively with you. Many taxpayers get behind on their tax obligations simply because they are not receiving correspondence from the department. Usually the items were sent to like an old or even possibly a wrong address. So as I've mentioned, when talking about sales tax, every November, the Department of Revenue reviews the amount of sales that an entity has, and they may determine that your filing frequency needs to be increased. And you get bumped to a monthly filer instead of a quarterly filer. And of course, this is due to the fact you had an increase in sales volume. So in this case, if your address is not up to date, you might not have known that you are now a monthly filer. And if you file by the quarterly due dates, you are now considered delinquent. Delays in correspondence about overdue tax liabilities will extend the time it takes to resolve them and cause additional charges like interest, penalties, possibly collection agency fees to occur. You can easily update your address and other information online through MyPath. It's very easy. Once you are logged into your account, under the More tab, you'll find a panel labeled Names and Addresses. From there, you would click Manage Names and Address, the hyperlink, and it will take you to the page where you can make the updates. Again, for assistance, please see our Revenue 411 videos, which can be also found on our website. The next tip for success is file and pay on time. For income tax, this is generally a once-a-year event for you or your business. But I can tell you the number of times we've heard someone say, I forgot they were due. Failure to file and pay income tax or estimated tax payments due can result in penalty and interest charges. Another feature on MyPath that you have is you can set up due date reminders for any tax account to ensure that you are compliant with your filing and payment deadlines. For trust fund taxes, due dates vary depending on the amount that you are regularly collecting. Be sure to educate yourself on your business filing and payments frequencies. There is information on our website pertaining to both withholding and sales obligations. Again, the department applies penalties for late filing as well as late payments. So please be sure that you are properly submitting everything. And then our next tip for success is to have a separate bank account for trust fund taxes. We do recommend that you keep a separate bank account to hold trust fund money and to pay the tax due. If you do not keep them separated, you could end up spending the trust fund money and not realize you were doing it. So in general, it increases the chance of misusing the tax money. As mentioned earlier, you cannot use trust fund money for business or personal expenses. It is very important to know that using trust fund money for anything can be considered a criminal offense. And then our next tip here is, of course, taking advantage of our electronic services. This is the fastest and most efficient way to get things done. Back in March of 2020, when everything was shut down due to COVID, there was no one in the office to manually process items. So using electronic services ensures that everything keeps moving even when you take the people out of the process. I have already talked about some of these things that you can do through MyPath, but there is so much more. I encourage business owners to schedule due date reminders so that you receive notifications when filings and payments are due. Use MyPath to be able to review, save, or even print notices. You can request electronic statement of accounts, which will allow you to see how payments are applied and what credits you might possibly have available. And then, of course, make electronic payments. As mentioned several times, payments of $1,000 or more must be made electronically. Otherwise, there is what's called an EFT or electronic funds transfer penalty applied to your account. So the best way to avoid this is by paying electronically. The department does have instructions available for each of these services on our website, and again, many Revenue 411 videos available to help walk you through this process. And then, of course, our final tip actually is safeguarding your data. So as a business owner, it is important to protect your data and confidential information at all times. So let's go over some tips to ensure our systems are secure. Your systems are secure, excuse me. Install anti-malware or antivirus software on all devices. And this could also include your laptops, desktops, routers, tablets, cell phones, and of course, do the automatic updates. Use strong passwords of 8 or more characters. Use different passwords for each account. Password protect wireless devices. Also encrypting all sensitive files and emails. Backing up sensitive data to a safe and secure external source that is not connected to the network full time. Make a final review of information, return information, specifically direct deposit information prior to e-filing. Of course, wipe clean and destroy old computer hard drives, printers that could possibly contain sensitive data. Limit access to taxpayer and employee data, and then check the IRS e-services account weekly for a number of returns filed with an EIN. So if you or somebody affiliated with your business feels they are a victim of fraud, please contact our fraud detection and analysis unit. They are here to help you. So now that we've reviewed some tips to help you be successful, let's go over some resources to also help you achieve success. A lot of people ask where they can go to get useful tax information. The first place we would recommend is visiting our website at revenue.pa.gov. This slide shows what our homepage currently looks like, but we are always making updates, so it is subject to change in the future. Currently, a lot of information you need is either in the top toolbar or on the icon bar here at the center of the screen. From the top toolbar, you can easily navigate to your online services, forums, publications, get assistance, and obtain general information. The middle toolbar, the middle icon belt, excuse me, provides access to our most popular services. So you'll see My Path, Make a Payment, Where's My Refund, Property Tax Rent Rebate, and of course, customer service. Our website is compatible with all devices. So this screen here is just an example of what it would look like if you accessed it from your cell phone. So of course, this means that you can access it at any time and from anywhere. Usually when people are visiting our website, they have a certain question in mind. So we do have what's called our online customer service center. First, you will want to click either the image at the top of our website where it says visit, or select the icon in the center that says customer service. Once you click the customer service icon, you will just type in a question and term and hit search. Okay. And any frequently asked questions relating to what you enter will populate. The online customer service center contains answers to thousands of commonly asked tax questions. So we definitely recommend you check this resource before attempting to call or email. But if you have a tax question that is still not answered, you can submit a question to us. And to do that, you would just simply click on the toolbar where it says submit a question. It does require you to create an account. And once you've logged in, you have access to over 30 categories that will let you direct your question to the proper place. Just a reminder, search for what you need first before submitting the question. Again, our FAQs are all vetted through the department subject matter experts before they are placed online. And so you can feel confident that you are getting good answers. And then once you've submitted your question, you will immediately receive confirmation, and an individual specialized in that will area, excuse me, will respond within 72 business hours. Now, if you would like to actually speak to a representative on the phone, you can contact the department's Customer Experience Center, which is available Monday through Friday from 8 a.m. to 5 p.m. Our representatives in the Customer Experience Center are trained to handle almost all calls for the department. If you would need face-to-face customer service, you can visit a district office closest to you. We do have a list of the district offices and their contact information available on our website. We do highly recommend that you do call ahead and make an appointment before visiting one of the district offices. And last but not least, so let's quickly review your rights as a taxpayer. We've recently revamped our taxpayer Bill of Rights. Pennsylvania has a taxpayer Bill of Rights that ensures equity and fairness in tax administration and enforcement. The Taxpayers Bill of Rights sets for uniform procedures so that the Pennsylvania Department of Revenue treats all taxpayers equally and fairly. As a taxpayer, you have access to the following guarantees: the right to quality service, the right to be informed, the right to confidentiality, the right to retain representation, and then finally, the right to challenge the department's position and be heard. So per your right to challenge the department's decision and be heard, you can file a petition with the Board of Appeals. But it is very important to know that there are appeal timeframes which will need to be followed when petitioning the board. General timeframes to file an appeal with the Board of Appeals is 60 days from the mailing of an assessment notice. If the taxpayer is not satisfied with the decision, they may file an appeal with the Board of Finance and Revenue. General timeframes to file an appeal with the Board of Finance and Revenue is 60 days from the mailing date of the decision of the Board of Appeals. Okay. So to appeal that decision, the taxpayer may file with the Commonwealth of Court of Pennsylvania within 30 days of the mail date of the decision from the Board of Finance and Revenue. If you're looking for more information and timeframes for each tax type, please refer to the REV 460 and the REV 1799A forms. So as we discussed, the rights of taxpayers and the representatives, we will review some of the department's rights. So earlier we talked about record keeping. This ties into the department's right to audit. Please keep in mind, we do not perform audits just to find out what businesses are doing wrong. It's more of a standard business practice to ensure that everyone knows how to do things the right way so that all businesses are treated equally. Anytime an audit is conducted, the department will provide the taxpayer with a complete explanation of the audit findings for that the individual taxpayer and their rights during the process. Again, if you do get an audit notice, do not be alarmed. It doesn't mean you've done anything wrong. Audits are a standard practice of the Commonwealth. Please keep in mind that we are having this session today so that you do not land here. We want to let you know that the department does have these options, but we are trying to help you avoid any and further enforcements. So if you do not file a return, pay the tax due, file a timely appeal for a tax balance. The department does have the option to use the tools listed on this slide. The left side of the slide shows some of the more common enforcement tools. The right side includes tools we use when we receive little cooperation from taxpayers. So again, our goal in inviting you here today is to help you avoid the scenarios where these tools are used. All right, so you might be wondering why we have a second slide on enforcement. Once again, trust fund taxes are treated a little bit differently. Failure to collect timely collect and report sales tax money can lead to civil penalties equal to 50% of the unpaid tax, and criminal penalties for theft, embezzlement, or misappropriation of government funds. This is in addition to standard penalties and interest. This is an example where the cost This is, I'm sorry, this is an example where the cost of non-compliance is higher than the cost of compliance. Something unique to trust fund tax liability is that it attaches to the responsible party. The law says that the liability is enforceable against such persons, his representatives, and any person receiving any part of such fund. On a practical level, this means that an owner of a limited liability company that goes out of business with unpaid trust fund taxes remains liable for those taxes. The liability doesn't go away with the defunct business. That means the department will pursue collection against the individual using all available enforcement tools, including liens. So again, we do not want you here. We are meeting again today to help you understand your responsibilities so that you don't end in this area. So we've talked previously about protecting yourself so that you do not become a victim of fraud. But this slide is telling you what to do if you do suspect someone else is reporting fraud. Tax evasion is a crime that hurts all Pennsylvanians because when taxpayers do not pay their fair share, it decreases the revenue available to fund essential state programs and services. If you suspect tax fraud, report the activity directly to the PA Department of Revenue, including as much detail as possible. You can use the contact information listed on the slide, or you can go to our website, type fraud in the search box, and report suspected tax fraud will pop up. So after listening to the presentation today, you'll find yourself thinking that you may have a tax requirement that you weren't aware of. So again, we do have the voluntary disclosure program, often referred to as VDP. The program was created for individuals and businesses that have not met their tax obligations because they were not aware of them. The department liaison officer will work to make sure that all the taxpayers' filings and payment requirements have been fulfilled. There are incentives for coming forward in return for their voluntary disclosure, filing their tax returns, and clearing their tax debts. Taxpayers are only responsible for the payment of tax and interest. Penalty for all taxes administered by the Pennsylvania Department of Revenue would be waived when the requirements of the voluntary disclosure agreement has been completed. It is important to know that the program is only available for those taxpayers who are not registered with the department, for which no investigation or collection actions have begun. And then, of course, we want you to know that we do have several social media platforms. We generally use these outlets as a means to push information to taxpayers. We will post tax law changes, fast facts, events, anything new that is going on within the department taxes or with the Department of Revenue. So the REV 588, the REV 717, and the REV 415 are staples for all new businesses. They do provide a lot of good information for getting started and are available on the department's website again under forms for businesses. All right, so that does conclude our presentation for the day. We do want to thank you, and we want you to know how much we respect your desire to have a successful business enterprise in the Commonwealth. And as such, we are here to help you the best that we can. Your success is our success. So we do hope that you have found this presentation informative and helpful. All right. And are there any other questions at this time?
Thanks, Stephanie. We
You're welcome.
appreciate your presentation. And I would encourage, I just launched a poll. So we're just looking for some quick one question feedback for today's webinar. But while we finish up, if you do have any questions, please enter them in the Q&A. If you would like to actually ask a question, I can unmute you. All you have to do is request that in chat. That would be fine. We do have a few minutes left. As a reminder, we will be sending the recording out from today as soon as it's finalized. We'll also be sending the slides that you have been viewing, my slides as well as Stephanie's slides. And as a reminder, we just encourage you, if you do have questions, feel free to reach out to the Small Business Development Center. We're here to help you. We're here to connect you with the answers to your questions or resources to help you make the best decisions for your business. So I do see that Jason is answering the one question that's been posted. So we'll just wait just a second. If there's anybody else who wants to post a question, that would be great. I appreciate everyone who answered the poll. That's very helpful. So, okay, so I have a question. How can I schedule an appointment with the SBDC here in Philly? So all you need to do is go to pasbdc.org. That's on my slide. You would then look at locations and go to your county. Then from there, you'll see the center website, or actually there's a button there to request assistance. If you can't find it or whatever, feel free to reach out to me. I'll just put my email address in the chat box. And I will certainly get you connected to that office. I just need to know if you're in Philadelphia County. I believe Philadelphia County is covered by Temple SBDC, and I think it shares that territory with Widener University Small Business Development Center. So you can go to either one. I'm not quite exactly sure how they split the county up, but again, no wrong door. If you get into one center, we just transfer you to the appropriate center. So how can we access the recording? I'll be sending out a link. Not a problem. I'll be sending out a link and you'll get the full recording. I believe we can also share the Q&A. And so Olivia had the question in regards to taking an owner's draw on how to handle the tax. So I'll try to pull that from the Q&A, Olivia, and I'll try to include that in follow-up information. I'm just going to stop the recording right now.